Hi, I am Dr. Clint Bourne, professor, author, and former school superintendent. This production presents concepts on state tax and non-tax income, along with the state's budgeting processes for public services, including primary and secondary public education. This recording aligns with sections of Chapter 3 in my text, Making Sense of School Finance, a Practical State-by-State Approach. The Articles of Confederation governed the United States between 1781 and 1789 and sanctioned each state as sovereign, free, and independent, thereby limiting federal powers. However, the 10th Amendment of the United States Constitution, as part of the Bill of Rights, ratified on December 15, 1791, granted each state the power to create and administer laws not specifically stated in the Constitution, which included the establishment of elementary and secondary public schools, as well as funding for such. States rely on a broad range of income sources to fund state obligations. Most tax collections by a state fluctuate in response to state and national economic trends. States exhibit differences in state tax revenue, although income tax and general sales tax represent the largest unrestricted revenue sources. Each state deposits all income and sales tax revenues into the state's general fund, meaning that these dollars may be spent for any expense since they are unrestricted. State governments, however, also set aside non-general funds for specific purposes, thus restricting their use. Federal grants are the largest source of non-general revenue monies. Frequently, these grants come to the state as simple cash transfers. The federal government mandates many program requirements as conditions of the grants, and often states must provide contributing funds. Entitlement programs such as Medicaid and aid to families with dependent children are examples of programs that require a state commitment. The second largest non-general fund revenue source is institutional revenue, which includes student tuition from state institutes of higher education. Motor vehicle gas tax, vehicle license fees, motor vehicle sales and use tax, as well as toll road taxes are typically earmarked by law to support highway construction and maintenance costs. 41 of the states and the District of Columbia levy broad-based individual state income tax. New Hampshire and Tennessee tax dividends and interest only as income, although Tennessee has phased out this tax beginning in 2021. Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming do not have a state individual income tax. 45 states and the District of Columbia collect statewide sales tax. Alaska, Delaware, Montana, New Hampshire, and Oregon do not collect statewide sales tax. Property tax exemplifies a significant local government revenue, but this tax remains insignificant as a state income tax source. At the state level, Vermont property taxes contributed 26% of the state's general revenue, far and away the highest percentage in any state. State property tax in 4 states was between 10 and 15% of the total general revenue. In 6 states, the collection was between 5 and 10%, and in 7 states, it was less than 5%. 19 states do not levy a state property tax. State property taxes are often on personal property, such as vehicles, and taxes on land owned by utility companies. Excluding taxes, state revenue also derived from non-tax means, including federal public assistance grants through intergovernmental transfers such as Medicaid, trust fund contributions to accounts for state pension, unemployment insurance, and workers' compensation, user fees, highway and transit tolls, higher education tuition, and state hospital payments, earnings on state-owned water, gas, and electric utility companies, as well as liquor stores, sales from state property transactions, investment returns from interest and dividends, and income from registration fees. Licenses, permits, fines, penalties, and gambling proceeds round out the collections. The most recently published general fund expenditures were $2 trillion by the states. Spending by service function with percentages of the total include primary, secondary, and higher education, 34.6%, welfare, 34%, health and hospitals, 7.6%, transportation, 6.5%, police protection and corrections, 3.5%, natural resources and parks, 1.5%. The remaining general fund spending was 12.3%. State politicians determine policy priorities and allocate fiscal resources among competing pressures through a budgetary process. States administer both an operating and capital budget. The state's operating budget establishes funding for the operation of state agencies and programs, including primary and secondary public education staff salaries, fringe benefits, and instructional supplies. The capital budget authorizes appropriations associated with the construction and renovation of state buildings, including schoolhouses or land acquisition. "30 states and the District of Columbia create their operating budget on an annual cycle, meaning that the budget designates funding for 1 year. The other 20 states, represented in white, implement a biennial budget adopted for a 2-year fiscal period. Because the business or fiscal year begins in July 1st in most states, a budget bill enactment and appropriation must occur prior to that date for spending purposes. The fiscal year in Michigan, Alabama, and the District of Columbia opens on October 1. Texas commences the fiscal year on September 1. New York begins on April 1st. The typical budgetary cycle begins the planning phase with the State Office of Budget and Management staff providing guidance to state agencies, such as the Department of Education. They also receive each division's funding requests and then consolidate all submissions into a statewide budget proposal. After review and analysis of the agency's budget requests, the Budget Office staff creates a budget recommendation for the governor, which becomes the proposal to the state legislature. Legislative committees by chamber review the governor's budget request, debate alternatives, and then approve their chamber version. A joint conference committee with legislators from both chambers join the two adaptations into one recommendation. After each chamber passes the consolidated budget resolution, the governor signs the bill into law, which then becomes an appropriation for spending. States employ different approaches to develop their budget: incremental, line item, performance-based, zero-based, and the budgeting, planning, programming, and evaluation system were the recognized methods. States utilize a variety of methods to determine school costs, which may decide the amount of money a district receives from the state. Those methods include the successful school model, school function model, and the evidence-based model. The successful school model identifies those school districts that were currently meeting state standards and then uses their average expenditure amount as a fair estimate of the actual cost of an adequate education. Cost function method differs from the successful school district approach because this approach attempts to determine not only a level of spending that is correlated empirically with academic success, but also how that level may change for different districts with varying characteristics. The evidence-based method uses a detailed list of program elements such as core staff, administrative staff, and others to determine the specific cost and accordingly allocates funding. The professional judgment approach employs a panel of educators who identify the necessary resources a school needs to produce high academic standard achievement and recommends that funding level. 30 states recognize incremental budgeting as their primary budgeting approach. Incremental budgeting assigns a set percentage increase or decrease from the previous year's funding level to determine the next year's budget. An incremental budget is simple because the state budget office sets percentage increases or decreases by allocations. The established percentage then applies to the previous budget dollars to shape the next fiscal plan allotment. This concludes the presentation on state tax and non-tax income and budgeting.